Okay, awesome. Well, thank you, Simon, for that great introduction. I'm also super jazzed to be here. I love Profit First. I am a huge fangirl of Mike Michalowicz. I've read all of his books. He has a brand new book that just dropped last week called Get Different. It's all about marketing. So I'm in the middle of that one. It's, as always, amazing. I think every time I get a book, I'm like, man, he's just outdone himself. And then he just keeps doing it. So I'm very excited about Mike's work. And as Simon said, he is absolutely somebody that you would want to follow if you're not already. So we'll just jump right in. I'm going to go ahead and get my screen share going so you can see the presentation. And we'll get going. So let me know. Everybody see the screen okay? Give me a thumbs up if you can see it. Awesome. Okay. So as the introduction said, I am Nicole Bendick Lamb, and I do own and operate Cake Business School, LLC, which is one of my two businesses. A little bit about, you might be thinking, cake and accounting, this is weird. Yes, it is weird. But I've managed to marry the two worlds together. So I, by education, was an accountant. I did not sit for the CPA exam. However, I did work in public accounting in the private sector for most of my adult life. Worked in public accounting firms that specialized in small business tax returns and monthly write-ups. So that was really my role there. But I'd always done cakes as a side hustle. That was always my passion. And so, newsflash, doing cakes is more fun than doing tax returns, but, whatever. But I ended up doing it as a side hustle for a long time. And then I started working with a cake business coach. And she is actually the one, funny enough, who introduced me to the concept of Profit First. It was not from my accounting background that I heard about Profit First. So I read the book and just instantly it made so much sense to me. So through the process of working with my cake business coach, I was able to set a goal and do the work. And I did successfully quit my day job in accounting and to open up my own cake business, cake baking business, where I create custom cakes for customers' weddings and things like that. So Profit First was a big part of that for me. And it was only about 6 weeks after I quit my day job that my cake business coach reached out to me and asked if I wanted to purchase the business from her because she wanted to move on to other things. And she knew about my passion for teaching, and with my accounting background, just seemed like a logical thing. So I did actually quit my day job and buy the business from my mentor, Rebecca. So, sorry, I hit a button and my screen went, and then it got me all off track. So, anyway, so what is Profit First? So as Profit First is based on a book written by Mike Michalowicz. And he has written, as we've mentioned, many books. And what it is not an accounting system, but it is a cash flow management system. And it is not meant to replace accounting and, your financial statements. It is a system that small business owners can use in tandem with your books to help you manage your cash flow so that you can operate not only a fiscally healthy business, but the most important thing is to be able to pay yourself and take a profit and make sure that you are covering your expenses as well as putting money aside to pay your income taxes. And so Mike has made it his mission to eradicate entrepreneurial poverty. And I saw this meme somewhere, and it really struck me that entrepreneurs, it goes something like, entrepreneurs are the only people who will work 80 hours a week, not take a paycheck, just to not work 40 hours a week for somebody else. So that really struck a chord with me. And, there's something wrong with that. So as a business owner, you're taking the risk, and small businesses really do change the world. So I love Mike's mission, and everything he's written really does help support that. But Profit First is a great place to start. So that's just kind of a basic idea of what it is. I had the absolute pleasure. I got to interview Mike on my podcast, which is called the Cake Biz Broadcast, which is meant to help other aspiring bakers who want to start their own businesses. And he agreed to be interviewed on my podcast. So I interviewed him there. I'll get Simon the links to those so you can check it out. He's not only brilliant, but he's hilarious. He's a lot of fun. So I also recommend his books, but get them also in audiobook form, because he does all his own narration, and he adds a lot of extra things, stories, and things you can put into place. And then I also was interviewed reciprocally on his podcast, which is Grow My Accounting Practice, which is through the Profit First organization. So you can check out my episode there too. So like I said, I'm a huge fangirl, so that was fun. I was able to contain myself, but we had a lot of fun. So let's talk about the old formula. Okay, so every business is going to have financial statements. You're going to have your basic profit and loss or income statement, your balance sheet, and your cash flow statement. And we all know the formula: sales minus expenses equals profit, right? This is what's on your P&L. Well, it's great. And we're not saying that you're going to change that, and you do have to use that. But there's a bit of a problem with relying on that formula for cash flow management and running a business in a healthy way. So the Small Business Administration had conducted a survey of 28 million small businesses in the United States. And they found that 22 million of those were break even. That's a lot of people who are pouring their hearts into their businesses only to break even. So what are all those people doing? They're all relying on the financial statements to tell them what they need to know to make good decisions in their business. And the problem with that is that it goes, well, that is logical, but it goes against our behavior as humans. So it really just focuses on the number, but not the behavior behind those numbers. So we're going to talk about human behavior for a minute. And this is actually one of the foundational concepts in the Profit First system, and it's called Parkinson's Law, which states that as humans, our demand upon a resource is going to expand to match the supply of that resource. So I'll give you one quick example. Have you ever been given 2 weeks to get a project done and it takes 2 weeks? But you could potentially be given that same project and say, okay, you got to have it done in a week. You make it work. You shift your behavior to make it work. So Mike uses the example of a toothpaste tube in his book and his lectures. So you think about, you buy a brand new tube of toothpaste. It's full, you got plenty, you brush your teeth every day, every night. and it's full, so you're going to slather on a big bead of toothpaste. You might slop some in the sink. It's no big deal, right? Because you've got plenty. Well, what happens over time as you use the toothpaste and the tube gets, less and less full, and you get down to that end point where you're rolling it, pressing it, pushing your thumb just to get that little bit because you haven't gone to the store. You make it work because you have to. And then if you think about, well, gosh, how long would that tube of toothpaste have lasted if I'd just used just the amount I needed from the beginning? We don't do that. It's just not in our behavior. I'll give you one other quick, I have to give a baking example because, it's my passion. So the other picture on the screen is some cookies that I did for a summer party. And I cover my sugar cookies in my white chocolate fondant, which if you don't know what fondant is, it's like a sugar dough that you can knead and roll out. You can color it, you can paint on it, emboss it. It's really great. Well, I make my own fondant because it just tastes better than the stuff I can buy. So I was working on this project and I had, I think, like 150 of these cookies that I had to get done. And as I'm getting to the end of my project, I'm looking at all the cookies I have left to decorate. And I'm looking at my ball of fondant and I'm realizing, oh my gosh, I'm running out. I'm going to run out. Well, I didn't want to stop, go make more fondant, and then jump back in. So I changed my behavior. I took that fondant and I rolled so thin. And as it got farther and farther to the end, each piece was thinner and thinner, and I made it work. And again, how much could I have made that last if I did that from the beginning? But it's behavior. We just don't do it. So Parkinson's Law dictates our use of toothpaste, fondant, and unfortunately, time and money as well. So the reality of how this relates to managing cash in your business, we all know that we should read our P&L and our cash flow and our balance sheet, and we should know all the ratios and be able to look at it and reconcile it to our general ledger and figure out how much we have available. But we don't do that. How do most people manage their cash? It's what Mike refers to as bank balance accounting. And so basically all this means is you're on the fly, you need to pay some bills, or you need to, have some kind of expenditure. Most people will log into their bank, either online on their computer or on the fly on their phone, look at the balance and, do that quick calculation in their head. Okay, I got enough. I'm going to go ahead and do it. And that's the reality. And so if you think about what we just talked about with Parkinson's Law, if we look at our bank account and we have a ton of money in there, we're going to behaviorally feel like we have plenty and we can just spend and not worry about it. And so, it's not logical. It's not the best way, but unfortunately it's how we tend to do it. And most business owners do this. And so Mike talks about, rather than changing your behavior, why don't you leverage your behavior to make it work for you? And so the biggest thing that, the biggest takeaway from the first section of the Profit First methodology is don't rely on sales minus expenses equals profit, because you're putting your profit last. What you want to do is have profit come out first, and then you're going to cover your expenses with what's left. It's forcing you to make better decisions, but it's also ensuring that you're going to be able to pay yourself as the owner of the business and take your profit, which is your reward for being the business owner and taking on that risk. So now Parkinson's Law becomes an asset rather than, biting you later. And one of the biggest ways to implement this and make it easier is to think about small plates. So this is something that like the health industry recommends, okay, I want to eat less. Well, if I have a big plate, I'm going to feel behaviorally compelled to fill up the plate and eat everything that's on it. However, if I just incrementally over time get smaller plates to fill my food on, I'm going to naturally consume less of it because I have less, it's not this huge serving platter to pick from. It's a smaller thing. So if you think about your bank accounts as plates, most small businesses, when they first start out, only have a few bank accounts. So you have to have a business checking, obviously, and you might have a business savings. Maybe you have one other, but most of the time people start out, they have one or two bank accounts. So if we think about these bank accounts as our trays or our plates, you will see on this graphic, and this came right from the Profit First book, we're going to look at one serving tray, which is our income account, which is where all of your money is going to flow into. So every time a customer pays you, it goes into your income account. From there, you're going to portion it out to what Mike calls the other foundational bank accounts that you should have if you're implementing Profit First. So your income account goes, sorry, I don't know why my thingy keeps flicking. Give me just a second. I think I have timing problems here. Let me get back to this. All right, there we go. Sorry about that, guys. Okay, so the foundational bank accounts would be your income account, and then you need an account for profit, an account for owner's pay, an account for tax, which is income tax, and then your operating expenses. And that's the account where you're going to pay all of your bills out of. So it's very similar to the old envelope system, if you've ever, heard about that, where, back in the old days, my parents did it actually. Don't tell them I told them that they're old. But, you get your check, once or twice a month, and you cash it out, and then you have an envelope for, rent and household and, all of these things. So your money is allocated to specific purposes, and you don't take money out of this one to pay something out of that one. You stick to it. And so it's just a way to kind of help organize that. So this chart on the screen now is from Profit First again. This is a chart that Mike's organization came up with after researching many businesses to determine what are appropriate percentages for those foundational accounts that a business of a specific revenue range would be operating at optimal. So the columns A through F, you'll look at the top row is called the real revenue range. I'm going to just give you a quick definition of real revenue. It's defined as your income minus your subcontractors and materials. It is not exactly the same thing as cost of goods sold or gross profit margin, just to clarify. But if you're operating within, you pick your bracket of where you're operating and then go down the column, a healthy business at that level should be able to operate by allocating. So we'll just take column A, So of 100% of your real revenue, you should be able to allocate 5% for profit, 50% for owner pay, so your paycheck is the owner, 15% for tax, and that leaves 30% for operating expenses. So at that revenue level, a business who's fiscally healthy should be able to run their business on 30% of that for operating expenses. So he calls this chart the target allocation percentages. Now, that doesn't mean you're going to be there. Even if you implement profit for, you're not going to be there. So you're going to start with your current allocation percentages. So the first step is to do a profit assessment. And Simon's actually going to put in the chat for you. I've got a PDF that is an instant assessment worksheet that you are welcome to download and, take it and go through your books and do that assessment for yourself. Sorry, guys, my slide is possessed. Okay, so back to this. So this is your target. This is what you would shoot for. So the first step would be to figure out where you are, which would be your current. And again, the instant assessment will help you with that. And that's just a quick kind of down and dirty way to do it. If you were going to actually fully implement profit first, you would want to do a full profit assessment, which involves a little bit more than what is included. But this is at least a start to kind of get you to know where you are. So now we can move. Okay, so I wanted to pop this slide up when I was talking about it so you could see my cool that I'm a big nerd. So it's all about behavior, not logic. So while sales minus expenses equals profit is logical, most of us don't follow that. We go by behavior, and most of us aren't like Spock. So yes, I am a huge Trekkie nerd. So that's why I have a picture taken like this. But our human nature dictates that whatever comes last is going to get ignored. So if you put your profit last, you're just like hoping you're going to have some, it's probably not going to happen. And if you think about what comes last is generally in our minds something undesirable. So I have gym class. Yes, I was the last kid picked all the time. So it was not a good feeling. You don't want to pick your profit last. So when you are implementing a profit first system in your business, the order in which you allocate to your foundational accounts is crucial. So I already mentioned all of your revenue is going to go into one account, right into your income account. And that is going to be your big serving platter. Okay. And then what you're going to do is based on the percentages that you determine from doing your instant assessment and seeing where you are, you're going to try to take baby steps to get you close to the target. You're going to allocate the appropriate percentage first to your profit account, second to your owner pay, third to your tax holding account, and then to your operating expense account. And that's the only account from which you should be paying any business bills. Then another step is an extra removing temptation. You're going to then transfer the profit and the tax to a whole separate bank to really protect that. You're going to make it really painful and difficult to pull money back out of those accounts, because you absolutely do not want to do that. You want that to build up. And the tax account, that's technically not really your money anyway. That's money that you're going to need to pay your taxes with. And I did want to make just one quick note. that 15% for tax, that is not corresponding with actual income tax liability, but it's been deemed by all of Mike's research that because you're basing it off of real revenue, it should be enough to cover what your tax liability is going to be. That's just a side note. So here's the flow again. Money goes in to the income account. You allocate it to profit, owner pay, tax, operating expenses, and then profit and tax, you're going to put that to a second bank where you're not going to touch it until it's time. So the next thing to talk about is, you've got your bank accounts open, you've got the percentages determined, you know what you need to put. The next step is to implement a rhythm, and you want to make this consistent so that it becomes a habit and it just becomes ingrained and you don't have to stress about it. So he talks about the 10-25 rule. So this is basically, he recommends twice a month that you're going to do your allocations. Some people will do it weekly. Some people will even do it daily. I think that's too much. I have found that twice a month is the sweet spot. So sweet spot, see what I did there? Cakes, sweet. So he just recommends on the 10th and the 25th of every month, you are going to do your allocations and be done with it for the next 2 weeks. Then the end of every quarter, you're going to celebrate because you get to take your quarterly profit distribution. Now, again, your owner pay is a whole separate account. So you're going to pay yourself your paycheck on whatever frequency you do. But the quarterly profit distribution is only going to come at the end of the quarter. And then also at the end of every quarter, you will look at your current allocation percentages and see how you did. You're going to, it's like a try, test, tweak, repeat process until you've taken enough baby steps to get to the targets. And then the last thing in the process is to make sure that you are sticking with it. You don't just try it once and say, well, it doesn't work for me. And you're not going to be able to go from where you are to the targets overnight, even in a quarter. Most rollout plans will be over a whole quarter, or I'm sorry, a whole year, like could be 4 quarters, 6 quarters. If a business is really struggling, it can take 8 quarters to really get it fully rolling. But the goal is to make small improvements each time. It's just like, you want to lose weight. You can't go to the gym one day and expect you're going to wake up the next day and you're all done. I wish, and it doesn't work that way. So again, you're leveraging your behavior. You want to make sure that you're taking baby steps so that you're not overwhelmed and just working toward it, sticking with the system, and that's how it's going to be successful for you. So overview of just all the phases of it. So the phase 1 we talked about is your profit assessment. And the quick assessment that you do is, as I said, that's just down and dirty. But if you're going to do a true profit assessment, it's going to be a historical review of your company's trends. And that'll match up best with, other companies in your revenue level. And then you have a plan to get to your target allocation percentages. So that's phase 1. And then the next phase is the implementation, where you're going to actually set up the bank accounts. and then immediately allocate to those. And then phase 3, it's your quarterly review where you're going to see where you're at. Are you close to your targets? What do you need to tweak? And I mean, it can be, I've done implementations where we're starting out with 1%, just 1% into profit because they're just not there yet. That's okay. And it doesn't matter. You've got to just start with something, even if it's a tiny, tiny bit, because each time you're going to learn and you're going to see what you can cut out and you're going to start focusing on your profit, which is going to help it grow rather than picking it last, like me in gym class. So that's really the overview. I wanted to just mention a few points about the Profit First system that I know a lot of people ask questions about. And one of them is probably the biggest, is that, well, why do I have to have all of these bank accounts? That really seems crazy. It's going to take forever for my bookkeeper or for me to like reconcile all these accounts. I mean, can't I just set up some spreadsheets, or can't I just, add some sub accounts in my general ledger? Why can't I do that? And the real answer is that is not getting to the root of the behavioral issue. So are you going to be more likely to log in, look at your bank balances, or try to find a spreadsheet and look through it? I mean, at that point, it's not really helping you. It's not really serving you. So if you think about having the account set up, you've got your other 2 accounts for tax and profit where you're not even going to look at them. You're truly getting a real cash picture of what you have if you implement it properly and you keep the money in the correct buckets or on the right plates. So that's one thing that a lot of people are just like, man, these bank accounts, it's crazy. And I will tell you, so my sister is a CPA, and when I was telling her, I'm like, yeah, I'm going to do the Profit First certification, and was explaining it to her because she hadn't really had exposure to it either. And that was the first thing she said. Well, that's silly. You can just do that with spreadsheets, or you can do it with sub accounts. Why would you do that? And it's like, okay, but is it gonna, doing it that way, does that solve the problem of the behavior? No, it doesn't. So that's why. And to be honest, it's not really that much more work for a bookkeeper, or even for you to reconcile numerous accounts. It really is not. And that is already, allocated, done, so you can see it quickly. And that's really your best bet. And so there are also another question that she brought up. She said, well, then you're going to be paying all these banking fees, minimum balance account fees and things like that. If you've got 5 or 7 bank accounts, then you're getting killed with fees. Not true. There are a number of Profit First friendly banks that you can go to and say, okay, I run Profit First and I need these accounts, and I need them to have no monthly fees, and I need them to have no minimum balance fees, because your income account, it's going to go down to 0 because you're going to allocate everything out of there to all these other accounts. So I work with currently BBVA Bank, which is now being taken over or merged with PNC Bank. I called my private banker and I said, I'm doing Profit First. I heard BBVA is a Profit First friendly bank. I need this and I need these terms. And you know what my banker said? Okay, no problem. So it does exist. So that is not a reason to say, well, I'm not going to do it, because you absolutely can get around it. And then Another myth is that people think it just simply doesn't work. Um, well, my question would be, have they really tried it and have they implemented it correctly? And there are a few things that I could think of that might make it difficult for someone. And one is that they're trying to push to the target allocation percentages too quickly. You can't do that. You've just got to take baby steps and get your behavior on board so that you can make it work. There are over 500,000 businesses that are successfully running with profit first as their cash management system. And again, it does not replace your accounting system. You're not going to have some other thing. You're changing your behavior, not your accounting. Another thing is that people feel like, well, the profit's there. I could just take that anytime, right? I don't have to wait till the end of the quarter. This is also a common mistake that people make when they're wanting to implement profit first. The reason, again, it gets down to behavior. If you are taking that profit when it's not time, you're not giving yourself that boost of, celebrating, like, woohoo, I did it, I've got my profit and I can take it. So you really should not touch your profit until it's time, because you're going to get that reward and that's going to give you, I mean, Mike even talks about, like, you get an actual dopamine hit, like you're like, whoo, that felt good. So you want to set yourself up for success. And again, it's not an accounting system. It is a cash management tool. So I'll finish my slides here. I had to just make it stop. I think they had a mind of it. It had a mind of its own. So now you've kind of got this is a very surface overview of the Profit First system, focusing mainly on, why it works and how it works with our own, how we're wired. So the next step would be, if you find this interesting and you think that it could be helpful, I really do invite you to download the instant assessment worksheet and just take a look, see what you think. And if you want more information, I invite you also to reach out for a complimentary discovery call. I am Profit First certified professional, even though my niche is mostly with baking industry. Doesn't mean that I can't help other businesses as well, because it really does work in every industry. Which is another thing that I wanted to make sure I said, because, and every industry is, got, their own metrics and things like that, but it really can be tweaked to work in your industry. So I'll tell you one quick story, and then I can open it up if you guys have some questions. But I did an implementation with a massage therapist friend of mine. And after we went through the assessment and I presented her with her, rollout plan, it was really interesting, because she was so excited to do it. And she said, honestly, I've always just been like, I didn't want to look at it. I don't want to look at the numbers. I knew I needed to, but I'd been avoiding it. And I was so worried. And she said, I am so excited now to actually, she's like, I've never been excited to look at my numbers or, look at my books or anything. She's like, I always kind of avoided it, but I think it gives you such a sense of empowerment where you have control. You're not just at the mercy. And it has really been instrumental in my success and my ability to, quit a day job and now follow my dream. So, we all, as entrepreneurs, I think that's why we do it, is because we have something that we know the world needs. And you know what? We deserve to be paid for that, dang it. So I hope that you will, at the very least, if you don't have a copy of the book, grab the book and check it out, because it's an easy read and it just makes so much sense. I think that you would really, really benefit from it. So I open it up to any questions if anybody has anything that they would like to know.
Hey there. So I feel sure I'm about to demonstrate my lack of being informed on these types of things. However, in the chart that you put up earlier, why, as the value of the business or revenue goes up, why does the owner's paycheck percentage go down?
Let me pull it up so I have it back on my screen so I can see the full percentages. I'd like to get a hold of whatever gremlin is inside my computer today. Okay, so looking at, you said the percentage of owner pay go down. It goes down because at that point, oh, that is a good question. At 10 to 50 million. So your profit goes up significantly and the owner pay goes down. You know what?
That is on the screen for us, actually.
Oh, I'm so sorry.
Yeah. Is that because then depending on how the business is set up, the owner pay actually isn't in the form of pay so much as it's in the form of a percentage of profit?
That is a really excellent question. I might have to get back to you on that because it's really not structured for, the type of entity. Is that what you were asking? Wait, you're just.
Well, I had heard something, and completely unrelated to any of this, but I had heard something talking about, CEOs and upper level in some of the like Fortune 100 companies and that kind of thing. They end up paying no income tax because their pay, their compensation isn't actually as salary, it is as percentage of profit. If I'm even remembering that correctly, which I may not be, but that's what prompted the question. It's like, why as the value of the business goes up, do we get to where the owner pay is actually 0%?
And the profit obviously goes up. So you're going from, like a 5% at the lowest level up to a 20% profit at, the highest level, 10 million and 50 million.
Not that this is at all applicable to me, don't get me wrong.
Nicole, can I jump in for a second?
Yes, please do.
Okay, good. Because so it has to do with, in a business of 250,000 or less, the owner is usually the one that really produces most of the work. And as the business grows in revenue, the owner it's not only going to be the owner who's going to produce all that value that the company is outputting through sales. So you're going to have other team members there, and the percentage of what the owner is actually working in the business becomes less, and it's going to get spread out more on the team side. So you see operation expenses going up to support that. But like net, it's still going to be an equivalent salary, or still going to actually go up because it's a smaller percentage of a higher number. So but yeah, you have a bigger team, and it's just not, if you think 10% of a $5 million company, that's a pretty big paycheck,
Right.
just for owner pay, not to speak of the profit. So
Right. Thank you, Simon. Anybody else have any questions? I'm curious, how many of you have read the book?
can we
Simon
see
has.
hands? No one.
No? Well,
I've
this is
started it.
great.
I haven't finished it yet.
Okay. Now, are you reading it or are you listening to it?
Reading it. I have a hard copy.
Okay. Do you have Audible by chance?
I don't, but your comment earlier made me think it might be worthwhile to look at this one.
Because I do both. I read, I have the hard copy of the books, and then I listen as well. It was really funny when I was interviewing Mike for my podcast, I was asking him about the new book that just came out, and it hadn't come out at the time. And I told him, I'm like, well, I actually listen because then I can be baking while, I'm learning about all these things. And his comment was, well, no wonder all your cakes are so delicious. He's very funny. But yeah, I don't know. I like to have the option of both. I like the book because I'm very visual. So I like to be able to, it's also helpful to have the book, even if you're listening and not reading, because all the charts and things, that way you've got them like right in front of you. It's very helpful. So yeah, that's great. I'm glad that you're digging into it, because it's pretty powerful when you really get rolling. It's pretty fun. Most of the so because I'm part of the organization, there's a private Facebook group for all the Profit First professionals, and at the end of every quarter, they always post a thing, okay, who's doing what with your quarterly profit distributions? And it's really fun to read all of the things. You can see people who are like, oh, I'm just starting out. I'm taking my spouse out to dinner. And then you've got the people that are like, oh, I bought a car, or, oh, I'm getting LASIK. And it's just like, how awesome is that to, know that you put, you're being rewarded, truly rewarded. You've already put away money for tax. You've already covered your expenses, and that's your reward. So it's I don't know. I like, it's almost like a game, the gamification of it, which again is, I think, why my massage therapist friend was so excited about it, because it just made sense to her. It empowered her, made her feel better about everything. So yeah.
Nicole, I have a couple of questions.
Sure.
One is, can you maybe talk a little bit about the distinction between profit and owner's pay?
Sure.
Especially if you're like a one or two person shop. Like, I think that's an important one. And then also, just out of curiosity, like, how off are people on average when you do like an initial profit assessment?
Yeah.
Like, what's the reality where most businesses are operating, just from your own experience, what you've seen?
Sure. So the difference between the owner's pay and the profit. So the owner's pay is the, the paycheck for working in your business. Profit it's explained as your reward for taking on the risk of the business. And so that's really the distinction. So you increase, as your revenue increases and you can continue to allocate appropriately, obviously you're making more money, you're going to be able to take more profit. And so owner's pay is really like your paycheck. As as like an employee of the business, even if, even if you're a sole proprietor or a, single member LLC, you're still, that's your compensation for working in the business. Whereas the profit is like the icing on the cake. And then as far as, it's as when people are first starting out and we do the initial profit assessment, I mean, quite often they're not having any profit at all. Like there's zero. And again, we're not just pulling up the profit and loss statement and saying, oh, what was your profit? That's not how it works when the assessment is. It's basically how much have you put aside for profit? And most people, they're like, what? Putting it aside? Don't I just wait till the end? And then if it's there. And you also, I'm sure many people have had this experience. You can pull up a P&L and it can show a profit and there's no money in the bank. So profit on paper is not the same thing as with this system. If you're taking it and putting it aside before anything else happens and you're not touching it, that is actual cash basis profit that you have available to you. So that's the first thing that I see a lot, is that most of the time, like probably, I actually personally haven't seen anyone that I've done an assessment with that has actually put aside any money for profit. I also find that their operating expenses, if say you're in middle of the range, and you should be able to run, like on the chart, 50% operating expenses for a business that's between, 500,000 to $1 million annual real revenue. I'll sometimes see like operating expenses at like 70, 80%. And it's like, how are you functioning? So generally, there's pretty big discrepancies between what the current allocations are versus, what their target should be. So operating expenses is probably the biggest place where I see it's just like way too high. And Mike teaches that, most businesses, if they just do like a quick assessment or audit of their expenses, you can usually cut about 10% of your expenses pretty quickly just by going through and really thinking about, do I really need this? Am I paying for things, am I paying for services that I don't use anymore? Do I really need this? Or by just getting better terms with your vendors, or, you don't necessarily have to just instantly say, okay, well, I guess we have to move to a smaller space and do all this stuff. You can find ways to like slowly lean it down to, get closer to your percentages. So I also find that a lot of people don't put away money for tax either. So usually, it can be not a pretty picture, but I always tell everyone, like, this is just where you are. Don't beat yourself up. You can always improve.
That's great. I mean, I my own journey, we've implemented profit first in a couple of our businesses, and I remember the tax just always got me. Like by the next year, you're like, fuck. And you're like starting out the year in the hole. And yeah. I remember it when we implemented it, and it was like the first year, and the money was there in December, and I could decide how much I wanted to pay, and like actually had flexibility in how to approach it. And I felt like for the first time, I wasn't just a victim to whatever my CPA is going to tell me, but we could actually starting to like strategize about things.
Yeah.
And that made a huge difference.
Yeah.
And I mean, I did it like every day. I loved like, a client check comes in or whatever, and whatever, a grant comes in and we allocate it, tick, tick, tick. I love doing that, and I love seeing it grow.
Yeah.
Yeah.
So I'm curious, Simon, did you also open up the 2 hold accounts at a separate bank, the profit and tax, to remove that temptation?
Not initially. Eventually, I did, because
Yeah.
I did. I mean, implementation is always messier than like the theoretical. So
Yes.
I did sometimes have to dip into it,
Mhm.
even though that was like a no-no.
Right.
And I mean, there's mind games that are going on, because you're justifying, okay, there's these rules to play by, and then there is what I know to be true about my business and how I want to invest money to get to that next level. And so, I mean, it's good to have a partner to talk it through,
Yeah.
because we business owners, we justify it, and we make a profit and we put it right back into, because that's the next
Oh.
thing, like reinvesting the profit. And
I'm glad you brought that up, because I didn't include that in the presentation, but that is like one of the biggest things that he says in the book and in the system is, don't plow your profits back into your business. You're completely missing the boat. Like, don't do that. He really is adamant about that, not putting it back in, because again, it's like
your
defeating.
backdoor behavior, backdoor, bad behavior,
Yes, it's,
backdoor.
you're just you're still doing it, like, stop doing it. So yeah, I'm glad you brought that up. That is definitely a big thing. It's a big temptation. And for me, when I implemented it in my baking business, I was not working full time at that, so it was, I don't know if it was easier or more difficult, but I found that I was actually pretty good on my operating expenses, but I wasn't, I wasn't paying myself as much as I wanted to. And, there's so many moving parts too, that, everybody thinks, oh, the answer is just more sales. Well, maybe you do need more sales, but maybe you don't. Maybe you just need to learn how to run things a little bit better. You can make your real revenue higher, become higher by controlling expenses, the subcontractors and materials. And that's, step 1, start looking there. So I have everyone, once we've done the assessment, I have them, then the very next step is, all right, go through your subcontractors, your materials, and your operating expenses, and let's see where we can cut some of the fat to kind of just start with. And there's also advanced profit first implementation, where some businesses will have even more bank accounts than just the 5 foundational and the 2 hold accounts, where I do actually, for my baking business, I have a sales tax account, because I have to collect and remit sales tax. And so it just goes right into there. So I don't, then when it's time to file my returns, and it's there, I'm done, good to go. And they have a saying at Profit First: when in doubt, open an account. So, I mean, some people will have, they could have like 10 accounts, but when used appropriately, it works. So, you can definitely tweak it for your own needs, but you just, the bottom line is to not change your behavior, but leverage it. So use the system so that you don't have to worry about, and over time, I think you do change your behavior a little bit, but at that beginning, it's like, if you're on a diet, don't go buy a bunch of cookies right before you're going to start your diet, because are you really going to not eat the cookies? I mean, let's be realistic.
I
can't.
assume the rule about not plowing your profits back into the business is not an absolute rule. Obviously, there are some things that you have to schedule reinvestments for. So how does he handle
He would
that?
actually, yeah, he would actually say, don't touch your profit, but open up another, like if you have something that you know you want to plan for, like you know you're going to need to invest in some new equipment or something else, he would actually say, no, don't touch your profit, open up another account and start allocating there.
Out of the OpEx expenses. So you kind of
Yes.
like put money aside out of your OpEx expenses as a investment.
Yeah. And I know you might be thinking, well, it's all the same money. But again, it's that behavioral piece where I'm not going to touch that profit because that's my reward. And it kind of forces you to, make it work
Well, it's the
by,
same idea of labeling your bank accounts, right? So you individualize, label all of your bank accounts, savings and whatever, and then you personalize each goal for each account. That's really kind of the modernization of financial advising, is goal-based advising. So whether it's monetary profit first, you're still goal basing every single account, and every single account has a timeline, mission and purpose. And in reality, that should be worked into everyone's business plan. I joined late, so I don't know if you work that in and ask them to rewrite their business plan to focus and follow these steps. But, it's very important that, they buy into it other than verbally. And
yes.
mission and
Yeah.
purpose is really important.
Yeah, absolutely. And so, at the end of each quarter, once the assessment's been done and they've started, doing the allocations, it's each quarter is a reevaluate. You look at it, what worked, what didn't, can we increase our percentages toward, or do we got to leave it where it is? So yeah, it is not a set it and forget it kind of system. It is a kind of changing dynamic thing where you're going to continually reevaluate and work towards your goals. So yeah, I absolutely agree with you. And that's, yeah, the whole purpose is to, have those buckets there for their intended purpose and really, really avoid the temptation of deviating from that. So another thing
Really
that
quick, Dustin, I just
yeah.
wanted to say it like 100% transferred from I learned it first in business and then I moved it over to personal. But now I have like my going to Europe, my real estate, and I have like all these accounts, sitting up there, because then I have to very consciously not just take it out of one account, but if I actually ever have to, it's like I'm taking it away from this or I'm moving it from here. And I have like automated allocations set up every month going out, and anyway, it can apply to both.
You would be
well.
amazed at how many people are embarrassed to take money out of their, I manage money. So how many people are embarrassed to call me to ask for money rather than just transferring it in their bank account they control. Having a human interaction is a much different conversation than just doing it yourself. And so the emotional portion of justifying and thinking through and making sure this is really what you want to do, because somebody might question it, makes a huge difference.
Yeah, that's 100% right. Like, he talks about, make it hurt. Like, you've got an account that says, take my son on vacation to celebrate his high school graduation. Man, if you wanted to, that's like taking money out of the kid's piggy bank. Like, do you really want to do that? But yeah, it is that emotional piece. So, I know I've said it a million times, but it all goes back to behavior. So that's interesting. Very true.
Yeah. One thing that I also love is just the owner versus the profit. Like if we buy stocks in a company, right, we get dividends or whatever just to own that. And in our world of business coaching, like we're talking about, there's a clear distinction between you being the owner of the company and you being like a technician or a manager or whatever in there. And implementing this to really start even feeling okay to get money without having to work for it is like such an important concept to kind of like start wearing different hats, or like feeling good about giving different hats or responsibilities away in your business, so that eventually you feel like a business owner and not employed in the business. And when we started doing that, I started really feeling like, okay, there's something else than just I am my business and my business is myself, and kind of like allowing for me to show up in my business differently. I didn't plan for that, but that just happened automatically through that distinction. So
Yeah. One other thing too that I didn't really get into, but we have some time, is, a lot of people that I do implementations with, they're like, well, I have a lot of debt, like I got to pay that off. So how does that work? So there is a plan for that. You can still implement the system, and you still put away a percentage for the profit, based on whatever your current allocation percentages are. But instead of, at the end of each quarter, instead of taking the amount that you would normally take in full for the profit piece, you still take some of it. Like you take maybe 1% of it, and then the rest of it goes to pay down your debt, like get that done. So you don't want to not reward yourself, because again, the behavior, right? You still want to reward yourself. And then a little gravy is, hey, I'm knocking my debt down. And he really recommends, kind of the snowball method. I think he recommends, following Dave Ramsey's like debt reduction system, where you want to pay off, a lot of people will say pay off the highest interest rate debt first, but they recommend, you're going to pay off the smaller balances, because that gives you kind of that initial momentum of, oh, I did it. Okay, now I got that one done. And then kind of focus on the rest until, you've crushed it all. And then snowballing that extra money. So you get one card paid off. Well, what you would have paid to that, you're going to kind of piggyback onto the next, so that you can pay it off quicker, even though, you're doing the little ones first. But again, it's that reward and that feeling of control and, taking action and moving forward,
How do you
but yet
convince
still
someone?
taking a profit.
How do you convince someone to stop telling themselves they're sacrificing profit to pay down debt? How does that conversation go?
Well, and that's the reason why you recommend, you're still gonna take something, even if it's enough for a Starbucks. You got to take something. But I think a lot of people have such an unhealthy relationship with money and their mindset, that I tend to really have them focus on, okay, you're not really sacrificing, you're saving yourself. You're taking care of, that was in the past. You're going to get rid of it and just focus on how amazing that is going to feel when that is cleared off your shoulders. And then you're going to be, kicking it and taking the profit that you're meant to take. So is that helpful?
Yeah, it's just, people, I run into it all the time, where instead of properly allocating their assets, they maybe think they're going to sacrifice and pay down debt, when they don't understand that the debt is not necessarily the thing holding them back. It's what they're keeping from, their spending habits. And so breaking that transition of, okay, well, I'm just going to pay down debts, I'm going to make more. It's really, actually spend less and allocate it properly, understanding that some debt is meant to be carried forward, but properly allocating your assets, treating yourself the way it's supposed to, because you could end up debt free and really with nothing.
Right. Yeah. No, I agree with that.
I mean, from my experience, it's like most people, like what you said in the beginning, I don't know what the statistics were, but like most people and most business owners are like in a break even, barely making it. So actually seeing some of the wins that come from the behavior is getting them on that path of excitement to actually be like actively engaged in the conversation around money, where in the past they've just like ignored it. And from that place, there is an opening to learning, there is an opening to new perspectives, and like just starting to change new behaviors out of like the small wins that they're doing. I mean, that's really what I've seen. We've had clients that have been $500,000 in debt, working their way out of it, you know, not a high volume company, but working their way out of it and being with it and being like actively engaged with their debt all the time, starting to track it, starting to move it down. And it's a dialogue, and sometimes you have a good day and you have a good month and you do the right choice, and sometimes you don't, you know, you just got to stay in the game kind of. I mean, that's just my own experience with it.
Yeah. Money is definitely one of those topics that is very emotionally charged for almost everybody. I think mindset is a big piece of it, you know. I actually, in my cake business school, I have a whole module about mindset, particularly around money. And, you know, it's tough. People don't, we're very, as humans, we're very good at fooling ourselves and denying. And I feel like the longer you put something off, the more emotionally charged you are, and you don't want to, yeah, you just don't want to know. So that's probably the biggest challenge, not the system itself, really, because it's pretty simple, but getting people on board with, you know, taking some responsibility first and foremost, then to allow you to take control and actually implement something that's going to, you know, help you and make you feel better.
Yeah. Let's see, are there any other questions? Carol, no. No. We're good. Okay, I think Nicole, anything else from you? Or I see some cameras coming on. Are any questions? Feel free to jump. This is the time to jump in. Okay, great. Nicole, thank you so much. I saw that you had a slide with like contact information for.
I did, yeah.
So will you send that to me so I can send it out to all of our members as well? And yeah, if they have any questions, your phone number is going to be there, your email address is going to be there. If you haven't tried, like if you have a special occasion and you're looking for like an amazing cake creation, I think we've used you a couple of times, Nicole, and it's always been like, just like the star of the show kind of thing.
Well, let's see. Am I still sharing my screen?
No, we see like a cabin.
Yeah, that's my dream house. Hold on. I want to, since we have just a couple minutes, I'll just bring up my this is my cake website.
Nice.
So I'm very into standing out and being different. But yeah, also if you guys need like an amazing website, this was designed by they're called Mesh Base, and Marilyn Garrison. She did the photography, but so my niche in cakes is outrageous, kind of crazy stuff. And actually, Simon, let me get to that slide. That's the cake I think I did for you guys. So yeah, I told you guys I was a nerd, but yeah. So yeah, if you ever need a cake too, you know, let me know. do that in my spare time. But yeah, thank you so much for having me. This was really, really fun. I'm always jazzed to talk about Profit First and Mike's work. And yeah, definitely check out his new book too. It's called Get Different. So I haven't finished it yet, but I'm in the throes of it. So it's pretty fun.
All right,
Thank you very
Nicole.
much. That
Thank
was
you,
awesome.
Nicole.
Thank you so
Yes.
much.
You're
Thank
very
you.
welcome.
All right.
Good
Bye.
work.
Everybody have a great night.
You too.
Thanks.
Okay. Bye, everyone.
Bye.